This will be another example where chart patterns and general technical analysis is still possible after a stock split. It also provides an example of a stock that has been sold heavily to sub-$10 prices. A general observation sees the 250 to 350 region emerge as a firm bullish foundation. Similar to chart pattern example case study 90, GBP/USD in 2018, WDC had a double top followed by two downswings, roughly in the same range during 2002. This forms a similar flat top with a slight concave feature from the two lower downswings in the middle. Again, it is not too important of a detail, but interesting to see on two different charts from different markets and time periods. When going through the 630 to 770 range, there is natural resistance that is eventually overcome with steady increases in bullish volume. A more aggressive incline emerges as the general outline of an ascending triangle is identified. Some candles spill out of the main triangle outline, but that is acceptable since those are all candles with higher than normal volume. Price action is also neatly contained within the trajectories of the old uptrend line and the ascending triangle's uptrend line. This highlights the approximate location of a recent inclined double bottom that also benefits from the upper resistance range of the ascending triangle outline, providing horizontal support. Interestingly, there was a flat top that also contained a strict double top for an accelerated drop. The old uptrend lines remain helpful as a new bearish reversal emerges from another strict double top. Downtrend lines from the double top provide additional guidance as to where greater resistance can oppose the larger uptrend. Two gap up fills provide a solid foundation of long-term support and stabilization in correcting the larger uptrend during the progressing recovery. An uptrend line from gap fill upswings can be useful in the future if there is a major drop. Here is a case where the lower boundary of a double top is extended due to greater support from 3 methods rising price action before the double top formed. It is similar to how small gaps form before a double top. To extend the lower boundary, the downswing in late February could be considered as forming a spread-out declined triple top. The more important detail is that it lines up with the declined double top's trend line for a valid long-term downtrend that has already resumed with the bearish acceleration into March. Here is another case where exceedingly high and constant selling volume has managed to break gap fill levels and even the stronger support potential from the intersection of two long-term uptrend lines with the 6890 gap fill. Interestingly, the temporary support offered into November highlights the brief pause in classic 3 methods falling price action of a horizontally flipped ascending triangle. This is also one of those less common formations that produces a significant bearish continuation. During a later recovery, there is also an analogous and equally rare formation of a horizontally flipped descending triangle outline that produces a bearish acceleration after the lower boundary is broken. Here is not only a sharp double top, but a broader head and shoulders formation. It also has a declined neckline define a descending triangle. The triangle has a slight downward slope to broaden the lower support boundary from the 78.65 level. Before the old 30 boundary is reached, an uptrend slowly develops and progresses after downtrend lines from the recent and older patterns are crossed with periodic bullish spikes. Price action is neatly contained within a flatter double top variant. that marks the transition from a steep uptrend to an even steeper drop. Naturally, the old gap fill levels around 30 offer strong support and even become the site of a new gap up fill in August. Going back to the time during and before the split reveals clear swing points running through ranges identified from patterns after the year 2000. It once again shows chart patterns and general technical analysis can still be effective after a stock has been split. This also demonstrates an example of a long-term recovery of an individual stock and broader sector after a major stock market crash. WDC being a tech stock heavily sold off, like others, in the tech sector during the tech bubble crash,